I've certainly read some things where, some of your players, some of the analysts have put all their physical assets into gold. Critical mistake. And this last couple of weeks, this last month is clearly indicative why you should not do something like that. A massive sell-off in gold, but we saw it coming. And whether gold stabilizes here and starts moving back up, that's certainly possible. We can see that we're oversold. The short-term predicted difference from vantage point is breaking higher. Does that mean gold is going to reverse higher? It's difficult to say. Right now we can identify some key levels: 1718, 1665, and 1624. In my opinion, I would be watching this 1665 area very closely. As we can see, is when gold is pushing lower here. This has been a very long time also for this, since this triple EMA cross has gone off. But what I want to point out here with the gold contracts, as the S&P 500 broke lower back in this exact same date, right around this middle of July, gold went on a really big rally. This is what's considered to be, what's supposed to be, a risk rally, right? Equities down, gold up. Well, the equities are going down, and so is gold. So is that correlation still in place? Well, I guess that's hard to say. We'll see what the non-farm payroll number is, but what I certainly want to point out here is that that correlation is clearly breaking down. So don't labor under the misapprehension just because equities are going down that gold's going to go back up. Right now we can see more money moving into the dollar than we can see moving into gold. We can see money coming out of gold and into the dollar and some of the other currencies. So be cautious of that previous correlation. I'm not sure it's still in place. Silver is another one to evidence this. You can see that it's just collapsed all the way down. We've broken down below into this $27, $28 mark. We've recovered the week and managed to close back up around the $30. It's also very, very oversold too, so it may get a little bit of a boost with equities pre-non-farm payroll. But again, after that non-farm payroll, I really see either way. The dollar benefits if it's a bad number. The dollar benefits if it's a good number. So you got to be. It seems like a good play to bet on the dollar, right? Now, going into some of our currency pairs, we've looked at the metals. We certainly want to look at, some of the, we will look at crude oil here in a moment also. The Australia-US currency pair, we can see here that our key level is now just over parity. I talked about this last week in the Forex Weekly Outlook, and one of the recommended positions was a short Australia-US this week in the 99. I believe it was 99.20 area. We can see we've closed at 96.71. So you see a single position in the Forex market over the course of a week produced 200-300 pips. Most traders have trouble doing that in a month, let alone in a couple of days. So looking at these high percentage trades, these are the ones you want to look for. Now, to start the week in Australia, I definitely see us retracing higher. I don't think it is just going to flat out sell off. I think the dollar is going to come under pressure. Pre-non-farm payroll, there's going to be position squaring, adjusting, etc., etc. So be careful of this. But again, moving up towards this parity level on Australia-US, a terrific play to get in there for shorts. Euro Swiss franc, we're going to keep that up and use this as a major pair. I've talked about this being the major pair, not the US Swiss franc. Key levels down here, we're going to buy this thing down to the 120.51 level. I don't see any change here. I believe the peg will hold at the 120 level for now. If we get below 119.50, we're stopped out. But again, we've had some terrific trading on this currency pair, basically running risk-free, buying off that 121.70, 121.80 area. But again, nothing goes straight up. Excuse me, nothing goes straight up and nothing goes straight down. It's going to retrace. We just want to identify these levels. 121.68, 121.63, and of course the 120.51 level. We've closed at 121.44. Euro clearly under pressure. Euro is likely to get a boost here, but either way, the Swiss National Bank is clearly going to be watching this very closely. Now, going into looking at the light sweet crude oil, that is something we want to look at, and we can see that it's following the equity markets also. A little more volatile though. You can see how it's again trying to push higher, but right here this week, these candles along this Vantage Point 18-day predicted moving average are pretty self-explanatory. This market is coming up and it's being hit with very significant resistance. continue to sell in this 84 level if we can get up there. We've closed at 79.20. We are going to retrace higher on light sweet crude oil. This is a selling opportunity. Do not get caught up in this, in a lot of this other risk trade, risk on, risk off. We can see that crude oil has sold off again back in end of July, and it has really only moved in one direction. It's tried to recover, but clearly it can't. So for now, crude oil is likely to push lower after a retracement. Now, the British pound US dollar, this one here has actually held its ground quite well, to be honest, this week, considering the sell-off in the Aussie, the CAD, the New Zealand, all these different currency pairs. We can see we've retraced all the way up to the Vantage Point 18-day predicted moving average. We failed at this level. My concern right now with this is these two additional indicators down here, the predicted MACD and the predicted TSI. That is a classic buy signal. So we want to be very cautious here. If we go in and we look at our short-term crossover here, we can see this rally, the short-term crossover, and then the predicted MACD and the predicted TSI followed a few days later. Now, looking at the rest of it, the medium, the medium-term crossover from Vantage Point is running flat, and of course the long-term is still pointing. I wouldn't say it's pointing down. It's running basically flat. So I could see a little bit of a potential rally in the pound.